Okay, go. And thank you, Ethan, for joining us today.
Oh, thank you. Really appreciate being here.
Awesome. Well, hey everyone, thank you for joining us for NTX Inno's Bytes with the Beat. I'm Kevin Cummings, staff writer at NTX Inno. If you've never joined us for one of these before, Bytes with the Beat are our short one-on-one virtual conversations with local founders, investors, stakeholders, and thought leaders. They're modeled after our core newsletter, The Beat. Bytes are meant to be conversational, fun looks at the people, companies, and ideas driving the local ecosystem. Today, I'm sitting down with Ethan Riegel, founding and managing partner at Gore Range Capital. We'll be talking about the firm's strategy and new fund, as well as a little bit about the local health tech scene. Just a reminder for everyone who's joining us, you're on mute. So if you have any questions, send them in the question box, and we'll try to get to as many of those as possible at the end. If anyone's unfamiliar with us and what we do, Inno is part of a growing network of sites. We're currently in 14 markets, and we're committed to covering and connecting the local technology, startup growth, and innovation scene. NTX Inno has been covering the DFW scene since August 2019 through a daily email newsletter, stories, quarterly events like these, which are virtual for now, directories, data, and more. NTX Inno is building a portal for the region's startup and tech communities. Check us out at NTX Inno to see what we're all about and sign up for the Beat. It's really the best way to stay plugged into everything that's impacting the local innovation economy. And in it, you'll get the local tech and startup news you need, analysis you won't find anywhere else, info on upcoming events and cool jobs, and much more. So without further ado, Ethan, why don't you introduce yourself and tell us a little bit about Gore Range Capital?
Yeah, thanks, Kevin. So I'm Ethan Riegel. I'm the founding and managing partner at Gore Range Capital. I founded the firm about 8 years ago now, and we are an early growth stage venture fund with a focus in healthcare broadly, but through the lens of skin health, aging, and wellness. It's the experience of me and my partners. We've both been in that space for a long time. I through a family business where we have a medical education business focused in dermatology and aesthetic medicine. I've had that business for about 20 years. It's called Dermex Media Group. And prior to that, and alongside that, worked at an array of venture capital funds, and actually founded my own business for a little while. My experience in skin health is also how I know my partner, Umberto Antunes. Umberto was CEO of Galderma for a number of years. He actually splits his time between here and the DFW area. Their U.S. operations are in alliance, and that is why I'm here. As we went to grow ourselves as a firm, we wanted to be close to each other, and this is a wonderful part of the country to be in generally, and a really nice part of the ecosystem to be in as well.
Yeah, I was actually going to ask you, kind of what brought you guys to the DFW area. I guess kind of, can you expand a little bit about, kind of the local scene, and I guess like what kind of advantages it has for a firm like you guys?
Yeah, so I mean, there are a couple of things. The scene here is it is a little bit smaller than in some other places, but that has benefits too, because you can actually you can take the time to get to know people. In New York, we were one of many long-standing, not differentiated healthcare funds. Here we are, we can be ourselves and be different, but also be a more meaningful part of the ecosystem, and it's a very exciting place to grow, as everything here is growing. And that's not just a comment on venture or the ecosystem, but the whole state. As we're growing as an ecosystem here, more broadly, it's a fantastic place to be.
Yeah, I think I get a press release about like once a week about Texas ranking on some list for startups and venture investments and stuff like that.
Yeah, no, it's a good place. It's a good place to start a company. It's an easy place to do work. It's an easy place to be in business. The basic things that are difficult in places like New York and Silicon Valley, or that are just expensive because of where they are. And when you're starting a company, cash is incredibly precious. So being able to take that money and dedicate it to the development of your product, you're just going to get further than you would if you were in a place where you had to spend that money on rent.
Yeah, where you're paying thousands of dollars more for the same space. Well, I mean, even though you guys, when you were in New York, you said you were kind of like one of many, but your first fund was pretty successful. So I want to ask you about the second one, but I guess, are there any like highlights that you want to kind of talk about from the first fund?
Yeah, I mean, there were a couple. So the first fund was a 2016 vintage. We were able to get a couple of good exits out of it. I think we've exited about half the fund so far, and I think the way we want to think about it is we like to be active, hands-on investors. We leverage our networks and our expertise in skin health to help companies achieve milestones faster and more capital efficiently than hopefully than if we had not been involved. So one of the best examples of that, I think, is our first investment, Castle Biosciences. So Castle is a next generation sequencing business. They look at the gene profiles of cancer tumors and look at a variety of biomarkers to help determine how aggressive they are. This helps inform the oncologist treatment plan. We got involved with them about 6 years ago now. They were standard of care in a rare type of eye cancer, and they were in the process of expanding into cutaneous, into skin cancer. We helped them in a variety of ways. We brought on the head of their medical advisory board, actually a gentleman who is also an LP. Actually, he's also a DFW-based physician and a great guy. We helped them think through how they were going to get compensated from Medicare. So we helped them build their studies, their payer studies, their knowledge studies, so that they could figure out how to get those out and help them get them published, so that they could get their coverage. And in doing so, also help them get really good coverage from industry experts and key opinion leaders, and kind of get it talked about the right way in front of the right people. That business grew from a little bit of just kind of a proof of concept amount of revenue to about 30 million when it IPO'd, and then we exited our investment at the end of 2019. So that's really the way we like to work with our companies. We are coaches. We're not player coaches, but we try and be as helpful as possible and really bring in the industry expertise that we have, in addition to the general venture support of how to company and how to manage growth and those things.
Right.
Lots of investors can do that. We try and bring in our special sauce.
Yeah, and I guess when you're going out and looking for companies, I guess what are some of the things that you're looking at in a company to invest in? I was reading something earlier, the mantra of tech startups is move fast and break things, but obviously in healthcare there's a lot more regulations that kind of go with that. So I guess what are you looking for when you're looking for a company to invest in?
Yeah, well, so I guess it depends on what you want to break. Breaking paradigms and breaking models is great, but you also need to be very careful. We work in a regulatory environment, and you have to do things. You have to break things the right way in healthcare. You can't disrupt for the sake of disruption the same way that you can in other parts of the market. We do look for things like that. I mean, we look for paradigm shifting companies. Companies that are really changing the game. Extending life by years, not months. Curing things that previously weren't curable. Really kind of moving the needle. We find that those kinds of solutions always have buyers, and it decouples you from public market risk. I mean, we were talking about before starting our call here that you see a lot of Me Too companies in venture, right? And you see how quickly everyone has a video conferencing solution, and how quickly all of a sudden we're seeing these security overlays and data overlays to every video conferencing solution, and they all pretty much are the same, except they have their own they're 99% the same, right? And you see some of that in healthcare too. There's whole thing in drug repurposing and Me Too treatments and that kind of stuff. And there's a business model in taking those things to the market, but that's not really what gets us out of bed. We like really fundamentally new things. We want capital efficient companies. We think our involvement is part of what lets companies be capital efficient as well. We can help you get through certain problems because we have the experience, and we can bring on experts that know the solution, how to coach through it, versus figuring it out on your own. That also gives us better exit opportunities. you keep your total enterprise value and your cost basis down. It just makes it easier. It makes it easier to exit. You can see some of the problems the decacorns have. They have nowhere to go, right? And hopefully they grow enough to be a successful IPO, and that's kind of all they've got, right?
Mhm.
And then in early stage, and this is probably the most important thing, we want high caliber managers. That can mean, and I know this is frustrating for people because that can mean a lot of different things.
Right.
Yeah, we love managers who are multi-time successful entrepreneurs, but that doesn't mean we don't invest in first-time managers. Because first-time managers, the first time going through it, it's very difficult to replicate the passion someone's going to have that first time through. But we want people who are dedicated, complete zealots for their idea, that will do absolutely anything to get a solution out into the market, that have taken the time to really understand what they're going through and kind of have a full time commitment to what they're doing, and who are also self-aware enough to realize that they may not be perfect at everything, and to know what kind of help they think they're going to need along the way. Maybe it's not all on day one, maybe it's as the company grows, but having that kind of self-awareness of what the kind of team they need to build around them is. And then we can help them think through who those people are, and we can bring people in from our network or help them think through bringing people from their network so they can set themselves up for future success.
Yeah, I was actually going to ask like kind of what you look for in like a founder and leadership team. So it seems like kind of that passion, drive, and kind of knowing when you need to bring someone in, knowing what you don't know, and when you need help is kind of what I'm getting is like really kind of what's important from the
Yeah,
founder.
passion, drive, commitment, self-awareness. Those are the big ones for us for a founding team.
Yeah, and I guess like on kind of the business side, like what are some of your criteria for investment?
Sure. So we're early stage. We have been first capital in deals before, but we may do some company formation stuff in the new fund. But really, it's for a therapeutic, it would be kind of it's clearly pre-approval, but usually kind of phase 1, maybe into phase 2. Although we will look like pre-IND for the right technology. For a device, it's pre-clearance. And for enabling technologies and IT, there might be some proof of concept revenue there. They might be kind of working through the details of product market fit. But we want companies that have a really strong thesis in the direction that they want to go, that have multiple paths to success, even if they're focusing primarily on one. And where we can really add value. So kind of in the general skin health ecosystem for us, broadly defined.
Yeah, and I mean, you mentioned the new fund, so I guess like what is kind of different from the first fund and then this new one? I guess like,
Yeah,
what's your kind of going to be with it?
Yeah, so the first fund, we were a little more generalist. The second fund, the big thing for us is a sharper focus on where we can really dig in and support our companies and add value. We want to really take advantage of the networks and the opportunities that the fund can bring to bear for our portfolio. We also, we're raising more capital than we were previously, but we're keeping the same number of investments in the portfolio. And for us, we really want to ensure that investments are well capitalized through key inflection points. And having the extra fuel that we can throw on the fire if necessary will just help those companies get to success. In our business, these things always have a way of taking a little bit longer and costing a little bit more. And so you want to make sure that you can be supportive and be a good investor for your portfolio companies when they need that extra capital.
Yeah, I mean, you mentioned raising capital. I'm a reporter, so I got to ask: are you able to disclose like the size of the new fund, or at least give like a ballpark number?
Yeah, so we're raising a 9-figure amount. We're the number is still working its way out as we're working towards a first close.
Yeah, and I guess like what have you kind of learned from your first fund and going through all that you're kind of looking to bring into the new fund?
Yeah, so I mean the biggest thing we learned, and this is interesting for me. We got a lot of pressure in the beginning of Gore to be a generalist healthcare. That the skin health market was too specialized, and that it would be difficult to explain to people. And we wanted it in Fund 2. We've been really embraced who we are. It's the skin health market. It's a huge market. It's a $200 billion market. 1 in 4 Americans has an active skin condition. 1 in 5 will get skin cancer at some time in their lifetime. I think it's 8 of the top 10 drugs right now have dermatologic indications, top 10 grossing drugs. So, it's a huge market, and it's a market that's built many multi-billion-dollar companies. And we need a little time to, have the conviction to dive in there. We also, want to make sure that we can, invest what's needed, and not simply what's asked for. So, prevent undercapitalization, be able to fix holes, and that's one of the reasons why we're increasing the amount that we're raising. And it lets us lead rounds and set terms. We're in kind of a unique position as a specialized investor, where we often get the opportunity to lead even when we're not the largest check. Because people want us at the table. I mean, we're getting board seats and smaller minority positions and rounds all the time. So we want to be able to write checks commensurate with those kinds of positions, so that we can keep the value that we're currently creating for other investors.
Yeah, and you kind of mentioned that you're also a co-founder of a company, so you've been on kind of both sides of the table. So like, flipping that around, like what advice do you have for fellow founders who are approaching, VC firm looking for investment?
Yeah, so I think I learned a lot. And the company's Ledger Holdings, and it's still doing great. And it's as an entrepreneur, you really should have an open dialogue with your investors. Really think about what the venture fund actually can do to help you. The answer for most of them is write you a check. And that's okay. That's totally okay. You need the check.
Yeah, money to keep things going.
Exactly. And actually the thing I tell most entrepreneurs is, take the money. There are some people who are predatory, and you can avoid people like that. And one of the few things you do get as an entrepreneur that is actually a huge benefit is you get to decide who you work with. And you get to decide who you bring into the team. You get to decide how to create a culture, what kind of culture you want, and your investors are part of that. So making sure that they fit in. And if you want someone who's going to be active like us, you should express that, and you should seek funds that do things like that. If you want someone who is just going to show up at a board meeting and challenge you to think bigger, and then but you can pick up the phone when you need more money, that's fine. And you should look for investors that are like that, because the oil and water situation happens when you have a misalignment of your expectations and the venture fund's expectations.
Yeah, and I guess like as your role, at Gore Range, I guess, do you kind of view your leadership role a little bit differently, having been on both sides of that table?
Oh yeah, absolutely. I think we try and do things in a very transparent manner. I'm always happy to explain why I'm doing things. I try and stay on top of what the market looks like from an ask perspective. We try and be very fair and open, because I know what it was like on the other side of that table, where you have no idea what the market actually is. You have very little understanding of what the terms are. We were fortunate. We had good counsel. I would tell any entrepreneur, make sure you get a good lawyer who is experienced in venture and early stage companies. Not your real estate lawyer or your family lawyer. Yeah. And there are lots of those out there, and they're in all different kinds of price points. And I would really encourage that. And that will make your life a lot easier too, because you'll have someone who can explain some of these things to you.
You're not the first person that I have heard that advice from.
Yeah, well, because and it becomes a challenge for us too, right? So when I'm on the other side of the table, and I see that a lot of the challenge is the fact that the venture company's counsel just doesn't know what market is, doesn't know what normal is. That's a really difficult conversation to have with an entrepreneur, because it sounds like I'm just positioning, and I'm just I'm just being a tough guy, and and that's not what we're trying to do. I want you to get good advice, please. It makes everyone's life easier.
Yeah, I mean, you mentioned the markets. Obviously, I can't do any interview these days without talking about the pandemic. So, like, what are kind of some of the trends happening, in the industries that you focus on?
Yeah, so there's a lot of interesting stuff. A lot of interesting stuff going on in skin health, and I'm reminded of one right now, because I just updated my camera, and there's a whole trend now in aesthetic procedures where you're seeing increased demand for aesthetic procedures, increased demand for rhinoplasty, for example. It's crazy up from 2020 to 2019. And it's just because you're staring at yourself, right? And I'm looking at myself in this new camera, and I'm like, oh well, that's starting to thin out a little bit. And I just I actually had to hide my view because it's so distracting, and that's a big thing called zoom dysmorphia. You're seeing demand for all types of aesthetic procedures. You're seeing a huge influx of pent-up demand for people who were avoiding treatments that whether a treatment is essential or not. I believe a lot of that is in the eye of the beholder and in the eye of the patient. But when the government steps in, you have a lot of people who were deferring psoriasis treatments and loading doses on biologics, or were concerned about the reaction that it might have with messing with your immune system while we're in a pandemic. And so you're seeing a lot of pent-up demand for that releasing as well.
Yeah, and I mean, like, obviously you've helped a lot of companies through this time. I guess, like, in general, the companies that have successfully navigated this pandemic, I guess, like, what have they done well that others might necessarily haven't?
Yeah, so I mean, the companies that have done well have stayed organized, have continued to execute on their plan, and been nimble enough to continue to execute. In early stage, many of the companies that we invest in, and many early stage companies in general, will have to pivot once at some point, right? And for management teams that are successful, they're able to get through that pivot and think through what their new market looks like. COVID, I think, kind of forced a pseudo pivot for a lot of companies, and it was a real question of, do you pivot and start focusing on COVID, or do you stay true to what you're really working through? We have a portfolio company that's a blood analytics business, and they actually pivoted to COVID for the first 6 months of last year because they thought it was their moral duty to do so. And they're not even particularly. It's not their focus. It's not their technology skill set to do COVID testing. It was kind of like trying to kill an ant with a nuclear weapon. But they did it out of the feeling that they simply should, and then they've kind of moved the company back into where their focus is, and it worked really well. They did not make very much money off of what they were doing with COVID, but they really built a tremendous amount of goodwill with their customers, with the agencies that they were working with, and we're seeing that all pay dividends now. And so, it was a very dynamic, hopefully once in a lifetime situation for all of us. Yeah, and the the teams that were able to successfully get through it are the kinds of teams that are going to be able to successfully navigate the next challenge that they're going to see in their business. And it's just about staying dynamic and figuring out ways to stay on message.
Yeah, I mean, since we're kind of getting close to the end of our event here, I wanted to make sure that I took a look at our Q&As that we had sent in. And so one that I have right here, they said, I'm a startup that I have limited experience, with forming a board. So what do you look for and what should we seek for the most benefit out of our board?
So, it depends on where you are. If you are really early, you want to get people who can help you think through the basics of, how to organize and how to kind of get yourself through kind of those initial milestones. The right board members for you are going to change over time. You want people that can help you if you need help getting customer intros. You can find people like that. If you need help getting your foot in the industry, you can find people like that. What you want to avoid is putting people on the board for the sake of putting people on your board. Your board right now, if you're early enough and you don't have a lot of outside investors and you only have friends and family investors, you can be your board. You don't need to be in a rush to fill those seats. There'll be plenty of people to ask for them later.
Yeah, and one thing I always like to ask in every interview, earlier you mentioned passion and drive is important. So like on a personal level, like what goal do you have? What impact do you hope to make through the work that you're doing with Gore Range?
Oh yeah, so I totally love the fact that we're working on technologies that eventually will improve patients' lives. And I love watching, Castle's a great example, watching a company like Castle go from a smaller specialty player to actually being approaching standard of care in certain parts of skin cancer, and us helping with that journey. And then you get to start hearing stories about people who have had the Castle test ordered on them and how it's impacted their lives because it impacted their treatment plan. And that's the stuff that really kind of gets us going. We just love getting these technologies and improving patient care, and obviously while making a return doing it for our investors. But
that always helps.
Exactly.
Yeah, and since we just have a couple more minutes, I guess like what is the future for Gore Range?
Yeah, so we're really excited. We're working through getting this new fund, and which is going to take this deeper dive into skin health, aging, and wellness. We think we have a great ecosystem here in the DFW area, and look forward to bringing those technologies in and growing in Fund 3, Fund 4, Fund 5, and continuing to build a franchise. We're really excited about it.
Yeah, I mean, more activity in the DFW scene is always welcome. And I'm glad we have like a little bit of time because I really wanted to ask. So like, what is behind the name Gore Range Capital?
So it's really difficult to think of the name of a fund. Basically, every part of a castle and geographic feature is taken, and so we were trying to think of something that exudes kind of the support and kind of the strength that we can bring, and that we were really helping people build things that last. Okay, so we kind of wanted these kind of bigger geographic features. And so my family has a home in Vail, Colorado, and so the Gore Range is a mountain range we can see from our house. So that's where we actually got the range that we used. But the goal is to kind of we want to help you create kind of a long-lasting company, and we really believe that that's the way to get a good exit is to build a company. Build a company. Don't build a product that you're looking to sell. If you build a company and keep working on building a company, eventually the exit will make sense.
Right. Well, I mean, that's a pretty good note to leave it on. So looks like we're pretty much out of time. So thanks, Ethan, for joining us. And also thank you all for joining us today for the latest installment of Bytes with the Beat. Inno is running these virtual events across all our networks, so I encourage you to check them out. And also be sure to check out ntxinno.com to learn more about the events and sign up for the Beat. Again, thank you, Ethan, for joining us. If you guys have any additional questions, I'm going to drop my email in the chat box, so feel free to reach out. And everyone, have a great rest of your day.
Thank you.
Bye.